Hello, welcome to Forex News Preview at xm.com. I'm Rafi Bajajan, and today we're going to be previewing the Australian quarterly inflation data due on Wednesday. So Australia will publish first quarter inflation numbers on Wednesday at 1:30 GMT. The data will be closely watched as it comes just ahead of the RBA's next policy meeting on May the 7th, and it also comes after the bank signaled at its April policy meeting minutes that it will consider cutting interest rates if inflation stays low and unemployment starts to rise. The last quarter inflation stood at 1.8%. It is expected to have fallen to 1.5% year on year in the first 3 months of 2019. Underlying inflation also is below the RBA's target band of 2 to 3%. We can see here in the chart that both the weighted mean and the trimmed mean looked at by the RBA are expected to fall further below 2% in the first quarter. So the labor market is a strong point in the Australian economy, but despite that, wage growth is subdued. It's stuck at 2.3% at the moment. So RBA would want to see higher wage growth before considering or dropping its neutral stance. There's been some positive news coming from China recently. China is, of course, Australia's biggest trading partner, so an improvement in economic growth there would boost Australian economic growth as well. But if in the meantime inflation continues to remain below the RBA's inflation target band and we see a further decline on Wednesday, we could still potentially see a rate cut by the RBA. At the moment, markets are expecting 25% basis points rate cut by October. Looking at the Australian dollar, though, in the currency markets, it has been trading sideways for much of the year, with key resistance being the 23.6% Fibonacci. So that could be easy to break if we do see an upside surprise in the data on Wednesday. To the downside, immediate support is coming from the 50-day moving average, so that could be broken if inflation numbers disappoint. So that's it for me. Thank you very much for watching and have a great day.